All right. Insane day today in the stock market. I mean, it looked like when you were looking at the futures, it was just going to be an absolute ripper of a day. We're going to build on yesterday's momentum that we got following the FOMC statement, where you had essentially like a 99-point rally off the lows of the day. And then you got the gap higher this morning. In fact, you were even a lot higher in the middle of the night when the futures were really ripping, but you started seeing a little bit of a fade going on as the morning wore on. And then once the market opened, it just continued to be this trickle lower in the stock market. And so what we're dealing with now is just this continued stubbornness with the S&P 500 with this 4,700 level. It cannot seem to break that level. I think it's like the 15th time now that it's trying to break through and really expand to new significant all-time highs. Instead, it just keeps dropping right back below it. So I think a lot of people, too, got trapped yesterday with that big, massive blow up to the upside when the FOMC came out, and people, even though that the Fed was being somewhat hawkish, people perceived it as dovish for some reason. They increased the number of interest rate hikes for next year. They're tapering faster, and yet somehow the market took all of that as being positive. So if you're new to this live stream, I go over a whole bunch of charts with you guys. I'm going to go over the most important charts of the day and what we're faced with, and I'm also going to go over yours. So make sure to post them in the comments, whether you're watching on YouTube, Facebook, or some other medium. Make sure to post them. I see them all, and I'll go over them all as well. So first off, we have the S&P 500 down 0.9% today. We have the Qs down 2.5%, and we have the Russell. It was down 2%. Apple was the big leader to the downside. I mean, we had almost like 4% downside there. You also have people who aren't willing to go to cash right now either. You're seeing that with the rotations back and forth. If it's not Apple, it's everything else. If it's not tech and Apple and the FANG stocks, we're going into utilities, real estate, staples, and anything else we can get our hands on. Nobody's really putting that cash on the sidelines at this point. So you got this really choppy back and forth. You'll see a lot of craziness in the Qs and with the Russell 2000 index, but then you look at the S&P 500, it almost seems like it goes up regardless. But then today, while the Russell and the Qs were tanking, the S&P 500 by and large was up. You had banks that are doing okay off of these perceived interest rate hikes that are supposed to happen next year. I don't know if you're actually going to get that or not. The Fed is not really all that keen on raising interest rates, even when they say they are going to do it. I'll take you back to 2018 when they try to do that. And let's pull this chart up. I'll just pull up the weekly actually to make it a little bit easier. Right here, you had this little blip right here back in 2018 where we started selling off. It lasted about 3 months. You can see we went from like 293 all the way down to like 236. I mean, it was like a 30% sell-off. And then when we started getting this mayhem right here, Jerome Powell and the rest of the Fed's like, oh, you know what? We're going to start cutting interest rates going forward. And they started doing quantitative easing again. So this is the reason, too, why you see the Fed so concerned about how they forecast what their intentions are going forward, because they're very nervous about creating another one of these taper tantrums that we saw back in Q4 of 2018. So quick thing for you guys, if you're posting in anything other than English, I don't know any other languages, so you might want to like try to put that in a different language for me. But anyways, SPY, we're still within this rising up trend on the weekly, okay? But how about on the daily? What are we looking at? Because when you're looking at it on the weekly, everything looks fine. It looks like we had a simple pullback back in September, and then we continued to rally thereafter. Let me pull it up for you guys here. My charts are being a little bit difficult. There we go. Pulled back in September, October, rallied back up, pulled back, and now we're just like basically in the middle of this trend line. But when you go back to the daily, this is what I'm really watching right here. And today was probably the most significant example of that. We had another really strong example of it back on November 22nd, which was really the jumpstart to a much bigger sell-off going forward. But you look, we keep trying to push in each one of these instances, push above this 4,700 level. And for whatever reason, everybody keeps liquidating above 4,700. They're not really wanting to hold shares above 4,700, and that's where you get this constant selling. So the last time we had a significant move like what we saw today was back on the 22nd, led to further downside. We got that pop right back up, if you remember it. This was also tagged to the whole Omicron freak out. You had a huge inflow of retail traders come right back into this market here. And then we consolidated some, but we can never push through it. Sold off for another couple of days, and then we pushed right back up. Now we gap above it. And what do? We sell off all day long. This was, you could say we maybe kind of gapped up above it on the 22nd. We did a little bit, but this was a significant gap higher. I remember when I was checking the futures this morning, I was like, well, I guess we're going to go ahead and go towards all-time highs. I don't like to trade in the first 30 minutes of trading. I know a lot of you do. For me, the reason why is because there's a lot of false signals that you get in that first 30 minutes, sometimes even the first hour of trading. So you get this gap higher in the morning, and I'm thinking, all right, we're gapping up, and we're gonna start running. Maybe this is that breakaway gap. And so I was starting to get myself in the mindset of adding some new long positions to the portfolio. Wasn't something I was overly comfortable with, but if I'm following the charts and those early morning gains held, there would really be no other option at that point. You got it, and then you just sold off the whole day. So I put any long setups or ideas that I had, I put all those on hold. And so here we are now. We're back below the 5-day moving average, testing the 10-day moving average, finding a little bit of support there. But on the other indices, it's kind of more interesting because on the Qs, it managed to rally just a little bit to hold that 50-day moving average. Now, that should be a little bit scary for the people who are bearish on this market because the last 4 times that we've tested it, we bounced hard. So here we are again, testing that 50-day moving average. Can it bounce higher? Tomorrow's going to be critical. How the market finishes out the week is going to be critical going into year end, whether we get that Santa rally going forward, because a close below this 50-day moving average and the whole landscape of the NASDAQ changes, especially if it's a significant sell-off. You go to IWM, and don't forget, guys, I'm going to get to all your comments here, but keep posting them. I'll get to each of them and go over them all. IWM, maybe a little bit more bearish than any of the other indices because you have this long-term support level going all the way back to March. I mean, some people would say, oh, you could extend it all the way back to February as well, late January. But nonetheless, very significant. We haven't had any closes below it. But look what we did here today. Close below it, just see if I can zoom in on it enough for you there. Just below it right there. You also have that descending trend line that we highlighted in the last live stream. It's holding as well. So it's keeping price compressed. It's not letting it break out. It had a chance to break out today, almost got there, but didn't even get a real test of it. So it pulled back immediately, back below support. So this is a very concerning picture that's being painted here on the Russell 2000. And what's the other thing? You've got strong volume on the Russell 2000. On the NASDAQ, very strong volume, guys. Look at that volume right there today. Strong volume. SPY, not as much, though. Above average, but it's nothing like what we saw from here earlier in this month. All right, so that should give you guys a little bit of a picture on the indices here. What about the volatility index? You got a little bit of a pop today. You're still, from a long-term perspective, pull up this chart here because I like to reference it a lot. You got 2 declining trend lines. We're still hovering below that bottom one. It doesn't seem like it wants to go back above it. Still above 20. Remember, on the VIX volatility index, above 20 is considered a heightened state of volatility for the market. That's what we're seeing here. That's what we've been seeing across a lot of stocks. So here's the other thing that I want to bring up. Verizon and AT&T. These are 2 stocks that have very, very strong dividends. They have big dividends. Verizon has like a 5+% dividend. AT&T has one over 9%. And where was the money going today? It was going into Verizon and it was going into AT&T. Look at these moves in Verizon. Verizon up 4.3%. That's a huge move for these telecom companies. AT&T up 7%. And yes, there was some favorable analysts writings and all that stuff that was helping these companies jump today. But nonetheless, the money was flowing in there. What does that tell you? They're looking for something more stable going forward. Yes, AT&T does not have a good track record, but they do have a dividend. So somebody's trying to get people are trying to get a return on their investments right now from a dividend standpoint. You're seeing a lot of your dividend plays attract a lot of buyers. I mean, look at NextEra Energy, one of your more conservative plays when it comes to volatile times. People like to flock to NextEra Energy. It's a utility. Everybody's going to have a power bill still. It's not like that's a service that they're going to cut in bad times. This thing has been on the rise for an amazing amount of time, going back to the lows from October. Just continues to truck higher. It completely defied the market today. But what else are we seeing here? We're seeing, we're looking at, pull up for you guys the list of industries that are rising today. Here we go. Left-hand side of your screen. What is the top industries today in the market? Not sectors, industries. These are the subcategories of the sectors. Silver, gold, steel, aluminum. Top 4 right there. Top 5, copper. Followed by tobacco. Why? Because addictions are going to still happen. I mean, tobacco has always been one of those industries that people flock to in more difficult times. They also have pretty good dividends by and large. Coal. And then you got your drug manufacturers. That's large part due to Pfizer being on just an epic run here of late. I mean, look at that rally in Pfizer. So that's why your drug manufacturers are rallying. But then you got telecom. So we got top 10 here with Verizon and them. Rising interest rates. That's your banks that are coming in as one of the top industries as well. Packaged foods, insurance, that's more financials there. Confectioners, again, a staples play. And speaking of staples, what do we have with staples? Look at this chart. This is like Pfizer. This is like the Pfizer chart that I just told you guys about. And I mean, massive move. I mean, staples doesn't move like this. 10% this month alone. Has the market done that this month? No. Let's see what the market's done this month. December, SPY's up a little bit. Okay, nowhere near 10%. Okay, trust me, we'd all be talking about it if it was. You got SPY, you got the NASDAQ, down on the month. What about the Russell 2000? Down for a second consecutive month and like the 4th time in the last 6 months. So what we're seeing in staples, this big move right here shows you there's a lot of concern in the market right now. Okay, and let's see what else. We were talking about rising interest rates. Bank of America, right? Look at these moves here. What are the companies that stand to do the best in a high interest rate market out of all the banks? Yes, you would think like Goldman Sachs, JPM, they'll do good too. But the best ones are going to be Bank of America and Wells Fargo. So you got Bank of America, one of the top banks on the day today, up 2.4%. Wells Fargo up 2.78%. Higher interest rates means billions of additional revenue for the large banks and for regional banks too, but primarily the large banks. All right, let's see what some of you guys have to talk about here. Thoughts on FB? So we talked about this one. I want to say maybe I talked about it with the people on the YouTube membership. I was talking about Facebook. And by the way, if you haven't done so yet, click join below. You'll get all my market research each and every day. Great way to get all of my analysis, my watch lists, all that good stuff. But check out Facebook. Declining trend line here, and actually declining channel. And it consistently hits off the bottom and top end of it. Well, what happened today? We tested it yesterday on the FOMC rally. And then we came right back underneath it again today. We tried to break through it intraday, but saw a sharp rejection. That rejection, maybe it has us going all the way back down to 308. That would be like a 10% move if that actually happens. But it's going to be critical. I think it's very critical for the S&P 500, the NASDAQ, and the Russell. But you can also throw in a lot of these FANG stocks as well. They're sitting at some dangerous levels here. With Facebook, you have a declining channel that if it does what it's done in the past, when it hits the top end of it, it's likely to go back down to around the 300 level. So that could be very, very problematic for the stock. Now, on the flip side with Facebook, it breaks through this channel and then it can make a move above 353. It becomes a very, very bullish stock that's likely to touch 380 again. So there's two ways to look at it here, but I don't like the declining channel that it's in. If I was to get long on it, it needs to at least break 342 going forward. Right now, it's about $7 below it. All right. So Victor asks, why are the indices and trying to get my face above the question there. Why are the indices and Bitcoin so well correlated of late? Well, let's go ahead and pull up that chart here. Actually, that's a new camera angle for you guys. If I can pull it up, there we go. All right, so when I'm looking at Bitcoin here, you can see that it's had a really tough go about it. I wouldn't say it's so much correlated to the S&P 500 because the S&P 500 was basically at all-time highs yesterday. But a lot of people are saying, okay, we're talking about inflation here. Why is Bitcoin not going up with the rise in inflation? Well, there's a lot of retail in Bitcoin here, incredible amounts of retail. So if people are getting margin called in the retails among the retail traders, they're getting margin called on some of their trades. Like let's talk about like SQ, for instance, right? If you're leveraged, into margin on stocks like SQ or PayPal or Chewy, right? You're getting destroyed. Okay, you're getting margin called. And so if you have positions in Bitcoin, what are you doing? Well, you're having to liquidate these positions in order to meet the margin call. So I think there's a lot to do with the retail mentality, whether it's Bitcoin or stocks in general. When they get nervous, they're going to fire sale everything. And so with Bitcoin, you saw Bitcoin too. What did it do? It rallied yesterday on the FOMC news. You also had the market rally, and it's rallying in lockstep. I don't think it's a safe haven like a lot of people think it is, because you saw gold rally today and Bitcoin's actually selling off today. So it's very interesting that it's very much it's more of like your growth versus value. When there's a market meltdown, people look more for value than they do for growth. I think it's the same thing. I think that Bitcoin and a lot of your cryptos are still seen as more of like your speculative growth plays rather than stable value plays. All right, let's see if I can make the peaceful transition here back to there. All right, so that was Bitcoin. Let's look at what other questions you guys might have for me here. And I don't think that was a silly question at all. All right, do we have a question that you got skipped? Oh, I see it here. Let's pull it up. My apologies on that one. You're asking, I need your help. I didn't put a stop loss on a couple of stocks, TIGR and BBIG. I started with 25K, but I'm down to 7K, and it's killing me now. How can I recover, or what strategy is best to recoup these losses? So let's pull up that chart now. We're going to look at a couple stocks here. First one, TIGR. Consistent selling, okay? Continues to hit its head up against this declining trend line there. What is that, about 6 days to the downside? Not getting much help. You also have BBIG. So a lot of times too, people will believe that in order to make back their losses, they need to stay in the stock that they were in. But sometimes staying in the stock that you're in is the worst thing that you can do. BBIG, huge play back in August with the Wall Street Bets crowd. And like what Wall Street Bets has done to a lot of people, they've cost people a lot of money and a lot of their hard-earned capital. And so we look at, okay, I got to get my money back. So you go from point A, which is what you started with, you go to point B and you get the big gain and it sells off. And then now you're at a new place, right? And we're trying to say, okay, my point B now is a significant loss. I need to get back to point A where I started at, and then I'll sell. But what I think that a lot of times people don't realize is that staying in the stock that you're in when it doesn't seem to want to go anywhere is depriving you of other opportunities that you could use better risk management skills on to make more money. So I can't tell you whether or not BBIG will make its money back. What I can tell you is that I feel like as traders in general, we have to look at ourselves for where is our account at now? And we need to ask ourselves, what's the best way to get it back going forward? And most of the time, it's not in the stocks that we're in that caused the losses in the first place. It's trying to find better trade setups going forward and not sticking to these bad trades. And I think a lot of times that can be very hard to digest those losses or to accept those losses and to move on to a different trade is basically accepting those losses. So regardless of what stock you're in, regardless of the problems that you find yourself in with any individual trade, you have to look at this possibility that stock's not going to be the key to success to making that money back. And you got to almost look beyond just making that money back and start saying, okay, I'm at a new point A. My point A before was, before I took all these losses, but now I'm at a new point A. I can't try to go from point B back to the original point A. I got to create a new point A and try to start making good trades going forward and build upon that 7,000 or 10,000 or whatever anybody's trading with. All right, how do we get on electrolytes? I don't know. I mean, we're talking. Some of you guys asked some good questions here. Funny questions, at least. Lattes are at an all-time high. Starbucks will expand into the adult industry. Massive growth. I don't know. I don't know anything about the adult industry with them. But how about a chart on BROS? Let's look at BRO. Oof. All right. First off, on this one is that's a pretty significant head and shoulders pattern, right? Hasn't been trading long. A lot of times I like to give stocks, 6 to 7 months before I even consider a long position. And this one's been trading since September, so you're talking about 3 months or so. So far, all it's done is form a bearish pattern. Big head and shoulders pattern here. Left shoulder, head, and then you got the right shoulder. Test and support. Now, a lot of times what you'll see is these head and shoulders patterns, especially in the strong bull market that we've been in since 2009, March 2009, is that these support levels, these necklines of the head and shoulders patterns will actually vault the stock to incredible new highs, or at least break the right shoulder, invalidating this pattern. So if it can hold the support here, which it's already tested and held at this moment at around 44.60, then there's maybe a move up to 54.55, but you got to use the stop losses. Today's an ugly day for the stock. It's down 3%. If it breaks and closes below this, I want to say about 43.87 level, if it breaks below that, you don't want anything to do with the stock going forward, because then you have a confirmed head and shoulders pattern and you just want to be gone with it. If it wants to bounce off of it, that's great. But it needs to show you a little bit of a sign there. It kind of tried to break out of this declining trend line today, but it didn't quite do it. You can see here, it broke out above it intraday, head faked, and now it's right back down inside this declining trend line. So that's another thing to be a little bit leery of. Frank writes, up and down, no trend. Very, very true. What is my take on these days? So I actually got stopped out at SH at the open. It was kind of annoying because I said to myself, I need to be disciplined rather than trying to be right. I felt like that market was going to start caving back down, but I also had a stop loss on SH, which is the one-to-one inverse of the S&P 500 at a stop loss at 1376. Took it out at the open. No surprise there because of what we were seeing futures doing. It was kind of annoying, but I wanted to wait to make sure that when I started seeing the S&P 500 dip back below the 4,700 again, that's when I reshorted the market again today using SPXU up a little bit. I went a little bit more on the 3-to-1 inverse just because of where I could place a stop loss and somewhere where I was comfortable with. So I was able to do that. I went with SPXU. We'll see how it does in the coming days. I mean, I don't think today was a bullish day at all for the market. I think tomorrow is going to be a critical day going forward. Probably the difference of whether or not I hold SPXU over the weekend. So we got another question here from Newell Donnet or something of that nature. I don't know if I said it right, but SLV. Yeah, I like the chart patterns. I do have it on my radar right now, and it's something that I could end up trading a little bit going forward, but needs to break above this resistance level. I don't think it needs to break above it to get long on it, but if it could break above this resistance level, it would be a huge move into something a much stronger move, possibly even challenging these highs from February. So I'm going to go ahead and get rid of that line. I don't think it's as relevant anymore, but you have a double bottom in place here. First bottom here, second bottom. Declining trend line, just kind of a steep sell-off more than a trend, but nice basing pattern. I think if it gets above this area right here, and I'm going to zoom in to it for you guys, this isn't a bad setup here. I mean, if it gets above, I would say like 2093, I think it could be a long setup. I'm going to watch it for sure tomorrow, even put a reminder on there to make sure that I don't forget about it. But SLV sets up really, really well going forward, especially if inflation gets out of hand. Remember, the Fed announced that we're only scaling back the purchases right now. Those purchases are going to continue to go on until March. So we got 90 billion this month. We've got 60 billion in January, 30 billion in February. We're not even looking at raising interest rates until March. So there's still plenty of opportunity for inflation to get much worse between now and then. And it wouldn't even surprise me at some point early next year, the Fed says, look, we gotta accelerate even further. We got to go ahead and start raising interest rates now. I don't think necessarily that'll be good for these guys, but I think as long as the inflation stays high, I think these commodities will do pretty good. There was definitely a flight to them over the last 2 days, and people were a little bit nervous about the whole inflation story, as evident by the fact that the top 5 industries that rallied today were commodity plays: gold, silver, aluminum, copper. Yeah, I think I said 5. Did I say 5? I think so. All right, GDX. Remember, you don't have to have these things for the long term. You can play the swing on them, right? Another double bottom here with gold, or gold miners, GDX. Needs to get back above 34. It's a very similar chart and trade setup here. I don't like it as much as I like the silver trade, but maybe above 31.64, you have some legs to it. The stop loss is probably going to have to be below these lows here. You can even be a little bit more aggressive and put the lows below the September lows, which would be 28.81 or so, 31.64. So you're looking at about, you're starting to get towards a 10% stop loss there. But on silver, you get along around 20.93. You're looking about more of like a 5% stop loss, 5.5%. So it's not as bad. So I like silver over GDX. Thoughts on NIO? So a lot of people keep asking me about NIO because I think a lot of people have bought into the story over the past year, and there's been a lot of activity on the EV front. But NIO is one that really didn't jump with Lucid and with Tesla. Geez, if I could type it right. There we go. I mean, LCID had an unbelievable rally there. Didn't see near the kind of rally as you did in Lucid with NIO, also with Tesla as well. I mean, and Tesla's breaking down. So Tesla breaks down, that's going to probably be a bad sign for the rest of the EV stocks. This is greatly problematic here. Probably the worst thing that could have happened today happened with Tesla when it broke below these recent lows here. I think that there's a move down to the low 800s coming, and I think that maybe the only thing that could save it is if this $900 support level can hold up, which would be the previous all-time highs back earlier this year. But if that doesn't hold, and I don't even know if it's that strong of support, then you got to move down to the lower 800s. But as for NIO, where does it fall to? There's not a lot of support underneath once it clears the support level, and it's done that over the last 3 days. It hasn't made any attempt to try to even get back above it. So this is a huge concern for me. This is where you want to start talking to yourself. If you don't have a stop loss in place, what's the line in the sand? And then just follow it. I mean, even these lows here from May have broken as of today. So there's just not a lot of support, and that's the problem here. It's setting up for a free fall, and I don't know how low it'll go. It's essentially, in order for the fall to stop, it needs to find its own support. It needs to create support, and that's almost impossible. I just dropped my pen. Here's another pen. That's the most difficult thing to predict. And you also have like a bear flag here too on the daily pattern. So the bear flag's confirmed. It's breaking to the downside, broke below some major support there. No, I don't keep an eye necessarily on polymetal or gold barrack unless it just hits my scans. All right, so is Fisker? I don't even know anything about Fisker, but let's FSR. Kind of short it. I don't know. I mean, look at the chop, man. I mean, it's been choppy since mid July of 2020. You have a little bit of a trend line here. I wouldn't short it personally. I just think there's too much volatility in trying to short a play like this. And I mean, it's really just directionless. It's just directionless in a massive, massive range. So be careful there. All right, guys. We covered a lot today. We talked about all of the commodities and how the market was rallying into them today. How some of your more conservative plays were also seeing a lot of strength with staples rallying like it's a growth play. Remember, your discount stores, your staples, they don't tend to rally real aggressively. So you want to remember that when you start to see these huge amounts of capital flow in, and then you're starting to see growth plays like what Apple, I mean, it's crazy to call Apple a growth play, but essentially it is. I mean, they got a monopoly pretty much on so many things, and they continue to expand into different areas. So they're still kind of like a growth play, and people are paying for that. But when you start to see that pull back some, that should be a great concern here. I'll do a couple more here. Asked about VS or QS and BABA. So let's look at these two. I don't want anything to do with Chinese stocks right now. There's just too much headline risk there with the delisting going on. BABA is in a consistent downtrend. It had a little bit of a hope here going back in August, September, and October. You thought, okay, it's going to confirm this inverse head and shoulders pattern. It didn't. It fell apart, and it hasn't looked back. I mean, this has been going on. I mean, it's like a shell of its former self. It's looking at almost like 60% in losses. I think at this point, you're just trying to hope that you're catching a bottom here without any reason to believe that you are catching a bottom. So there's a lot better trade setups out there to take a stab at. BABA would not be one of them right now. And I just don't even see, even if it does get a bounce, does it go up to 158? Maybe. And if it does, it's probably going to likely be met. It's probably going to be met with some resistance there too. QS. No, look, I like taking all of your questions. Somebody said, thanks for reading my stupid comments. They're not stupid comments, guys. I think a lot of people will share a lot of your same questions, and it's good to get it out there. Trust me, when somebody asked me about BABA, I've probably looked at BABA, 5 or 6 times already today. So it's because a lot of people are regularly asking me about it. So whatever concerns you're having, a lot of other people are having too. So QuantumScape, QS, when this thing pulled back, this thing was a nice opportunity to get long on if it was willing to bounce. It wasn't willing to bounce, broke below it. That's your cue to get out of it at that point. It's not too far from where it broke down at. Broke down around 26 at 23, so it's about 13% below that or something like that. I can't do math very well in my head, but nonetheless, there's not a lot holding this thing up. There's maybe some support right there, and it's sketchy support at best, guys. I mean, I don't even know if I'm drawing that quite right. I would say that's your support. If that breaks, I wouldn't want to be in it any longer. Everything on it is screaming, get out. I mean, it's breaking everything. So again, there's going to be a lot of you guys that have never gone through a really bad market. And when it does, everything breaks down and it creates a lot of ugly charts. But out of those ashes of ugly charts can come some really, really good trade setups. Favorite utility token is BAT. Check it out. I don't know if I get it on this one or not. Nope. Let me see here. All right, let's see if I can pull it up here. There we go. I'm assuming this is the one that you're talking about. Nice pullback. right here. You got a little bit of a pull back there. Almost like a bullish wedge, almost like, right? So breaking out, probably your stop loss. Again, with utility plays, they're much, much more volatile. So you want to keep that in mind. Play smaller position sizes, because if you're wrong, you're going to pay handsomely for it if you're on a big position. But this is probably your support level going forward. I'll just draw it on there by hand, but yeah, that's your support level going right across there. It breaks that support level, you need to get out of it. Nice bullish wedge in the meantime, but if it comes back down and it's showing a little bit of a willingness to do that right there, if that happens, then you want to be watching the support level and whether or not it can hold. All right, we got another question here. Would you focus on these value stocks or short on the growth stock plays, or these growth stock on the dead cat bounce? So a lot of times, so with a lot of trades right now, I'm not in a rush to get short, and I don't think anybody should really, because there's so much more questions that remain than answers in this market right now. We're seeing a lot of struggle with that 4,700, but you're also seeing this constant need to buy every single dip. We'll dip for a couple of days and go right back up to that 4,700 level on the S&P 500. And then we just drop right back down again. So we're not necessarily figuring things out per se. We've been stuck essentially at the same level since the beginning of November. I mean, look at it. I mean, we're just a shade below where we were at in the beginning of November. The market's not really figuring things out just yet. You have this big tug of war going on between the bulls and the bears, and until that resolves itself, it doesn't make sense to go heavy long or heavy short in the market. This has been some of the slowest 2 months of trading for me in a very, very long time. So when you do start seeing the floodgates break or the dam crack, and you start seeing a lot more downside to the market, then you want to start looking for where we had some dead cat bounces, because those dead cat bounces can often offer some really good places to put your stop losses at the peaks of those dead cat bounces. So any case, I think that's going to wrap it up, man. We went a good 40 minutes today. Great questions. We covered a lot of topics. You guys have anything else you want to talk about? I'll be doing this again on Tuesday of next week, and then we'll have the Christmas break. So that'll be exciting as well. Thank you, guys. God bless.